Welcome back to Rapid Quants. This is Michael Moyle. It is September 30th, 2024, and we're back with another market update. Okay, let's see where we are. We've actually progressed quite nicely to the upside, and now we're seeing a little bit of a pullback here. Bitcoin right here, and as I zoom in, you can see that we've advanced from the bottom of the channel, which was anticipated, right? Remember, we talked about this. Playing the swings was a great opportunity over the last 6 months or so. Probably you started seeing the pattern around June, right? So for the last 3 months, playing those swings was really where the money is, although here it doesn't, it didn't really top out all the way. But if you bought here on the bottom, the last 3 times, it was a really great trade. Now, of course, what's going to happen if we get to the upper channel here? And let's talk about that. Because as you can see, the expected move range, and again, I've created the new ranges for you guys here, as usual. Right, you see it here under bit.ly/crypto_em_ranges. This spreadsheet is available to everyone. You can just access it, go right there, and you have all coins, all major coins that can be found on Binance listed right here, and the respective upper and lower thresholds. Again, we're talking about expected move range, which I'm calculating every week based on volatility. In this case, it is realized volatility, not implied volatility, but it seems to be working very well. So it's kind of the poor man's expected move range. So far, it's been treating us very well. It also lines up very nicely here, as you can tell from the chart. It lines up fairly nicely with the support zones, which is, to me, always a little bit surprising, right? Because it's done based on an algorithm, and I think it spots it very nicely. So here on the bottom side, we're somewhere approaching the center of this big range. See, so what I'm talking about is if you're looking at the expected move range, and we've been looking at this a few times now, it started gradually rising, but also compressing. It's getting more narrow. And that's a good thing, but that's what we want to see. We want to see it rise and we want to see it compress. And what happens next usually is a breakout. And that, of course, is expected to happen up here. We don't really want to drop back below here, especially we don't want to close below here. We might see a step lower just to scare the children a little bit. That would not be atypical for this kind of phase of the market. So if it drops here below, maybe wait a day or two, see what really happens. And the ranges right now here for Bitcoin is 61,891, and on the upper side it's 69,244, rounded up, okay? Around 69,300 and 62,000, okay? That's really good enough. Ethereum, let's take another look. I already plotted it here as well. Yeah, still looks fairly weak. We got a little bit of a bounce here, and the ranges are compressing as well. Here now we have support zone around 2,500, and on the upper side it's around 2,850-ish, okay? This lines up very perfectly. And this is, I think, really the line of scrimmage here. We need to overcome that. We need to push it. We need to really get the ball up, into the upper zone here. And so far, I see very little chance of that happening this week. So this is going to be step by step. It's kind of trailing. It's kind of lagging behind Bitcoin a little bit. Yeah, not really very helpful at this point because it's kind of in no man's land. It was very helpful when it was down here. Remember, we talked about this a week or two ago, and I said that down here, this was really great support. And it provided us with an important clue because had it dropped below here, below like 2,300, I think things could have gotten pretty ugly on the Ethereum side. So it's been holding it. Right now it's bouncing back. And I think we're somewhere in limbo territory with Ethereum until we're breaching back above like 2,900 or so. We need to get the ball up here. All right, let's take a look at Ethereum, Bitcoin. So still not looking so great, unfortunately. We haven't gone really anywhere. This has been a consistent downtrend. I could draw some lines. Okay, let's draw a quick line here, but I mean, it's pretty obvious, right? It would be somewhat a mean regression line here, thumb by pi algo, right? And yeah, it's not looking really good. It's still actually below the median here, right? If you're looking at this, the ongoing trend, it's actually sagging lower and it's not really catching up. So it's still trailing Bitcoin significantly in its advance. All right, let's take a look at Total 3 just to see what's going on just with alts. Looking actually quite nice. And I have a feeling that we're approaching a situation where the alts are somewhat detaching from Ethereum. And let me provide you a little bit of background. Because over the last few years, we've always drawn a very close correlation between Ethereum and the alts, right? And, well, that seems to be detaching. You can see that the Total 3, which is without Ethereum and without Bitcoin, it's holding up quite nicely. And it's doing much better, actually, on average, right? The collective altcoin market, it's doing better than Ethereum. And I think at some point we need to probably say goodbye to that correlation until Ethereum can really catch up. It's really lagging everything else right now. So, all right, back to Bitcoin. Keep an eye on this. Again, the big picture is really important. A lot of people are still feeling very bearish, and that's kind of interesting if you really look at the big picture here. Let's zoom all the way out, right? Look where we are. And again, if I go slumming on Reddit and Twitter and everything, well, I have no problem with Twitter, but especially if you go to places like Reddit, the crypto Reddits there, the channels, you see a lot of noise and a lot of fear, uncertainty, doubt, a lot of FUD. And I really wonder why, because, look where we are. We've recovered so nicely since December 22. We're up here, we're experiencing right now what basically constitutes a sideways correction, right? Look at this channel up here. It's nice. And we're actually approaching the upper ranges. So it's really interesting how the entire retail market, it seems to me at least, maybe it's subjective, but from what I can tell and the level of interest that I'm sensing in the market, it's really sleeping through it. And once things go really crazy again, which I expect to happen the next quarter that's coming in a day or two, today's the 30th of September. So yeah, tomorrow's October, right? So that means that most likely the next quarter, which starts tomorrow, is going to be where a decision is going to be made here. And by December, we might be up here, above the chart, yeah. All right, let's take a quick look over here. Again, don't forget this URL. Check your EM ranges no matter what you're trading, no matter what coins you're trading. Okay, very valuable. And I want to show you this real quick. So we have Gravitas. As you can tell, it was a little bit whipsawed doing this correction, but now it's back on track. It's actually right here approaching max returns. It's back at 98K. I'm very happy about it. It took a long position down here somewhere. Time did well, and so did Veritas, by the way. Yeah, so Veritas also gained another grand, and it's doing very well. So I can complain. It was a little bit in cash, as you can see by the straight line here, because Veritas does stay in cash, but now it's back in Bitcoin, and it's doing very well. So yeah, there's one more thing I want to show you, and that's, again, non-crypto related. Let's talk about Vixen. And I actually, over the weekend, wrote an optimizer because I had really just kind of eyeballed the parameters. I want to also see how fragile it is. And yeah, I was really honestly blown away. So this is the last 4 years. I've optimized the setting a little bit in terms of the implied volatility term structure. And again, we're trading on the basis of the VIX, and what's being traded here is actually the spiders. And that's over the last 4 years, trading one spider position cumulatively. And we basically had $250,000 here, taking both long and short positions. If you only take long positions, it's around $125,000. If you take both combined, it's close to $250,000. So it's absolutely crazy. And I created a few other plots here. Let me see if I can find it. Yeah. That's actually where I do some parameter optimization, and I've narrowed the ranges a little bit and expanded the ranges a little bit. And I did a lot of testing, and it seems absolutely stable. It's just crazy. Basically what I mean is changing the parameters really doesn't affect the outcome suddenly. So there's a slow drop off, which is really what we want to see. I have another chart here. So you see that basically down there are the combination of values that I use. This is basically parameter optimization that I'm using. Don't worry about that down here. Just look at the values, right, and how it just slowly slopes off as you change the parameters a little bit. And I did some fine tuning here, and it just looks solid. Solid AF, frankly speaking. I'm stunned, and I'm stunned by this, honestly. I didn't expect this. And it's been solid over the last 4 years, you can tell here. This starts in mid-2020, so about 5 years now that I'm testing. A little bit over 4 years, my bad. So it's just absolutely crazy. I've never seen anything this solid. It's really beautiful. And I love that it takes short and long trades. Apparently the short side didn't work so well after COVID, see that, or during the COVID crisis. The long side was doing better. And then it really kind of caught up with each other, as you can tell. I see a little bit less standard deviation on the long side. So if you're more conservative, you probably would want to only trade the long side. If you really go for max profit, you should basically take long side and short side. And again, Vixen is called Vixen because it trades on the basis of the VIX, and specifically based on the implied volatility term structure, which is the delta between, well, there's different ways to describe it. If you're looking at the futures chains, if you're looking at the futures contracts, but here specifically they're looking at the 3 months VIX versus the just 30-day VIX. And on the basis of that, I've written an algo that takes advantage of certain phenomenon, certain deviations that I measure, that I have incorporated in my code, that actually I've been training for a long time manually, and it's been just working so well. So that I sat down and just actually finally put in an algorithm and tested it. And honestly, I'm still stunned. I'm stunned. I mean, it's just a few surprise settings that did really well and pushed it. I think the max was somewhere around 160,000. And then over the weekend, I tested it a little bit more and did a little bit more optimization. And now it's close to 250,000. And again, it's not anything that is an unstable edge or anything I would describe as outlier edges, right? We just have a few particular settings that would have worked very well. It's just really smooth. And that's exactly what we want to see. We want to see a forest of good returns, right? We want to see a whole forest full of good tests, of positive returns, good systems, no matter how you affect the setting. We don't want to see anything where suddenly you change your setting a tiny bit and boom, it drops off, because that would be basically curve fitting. And that's not something you want to ever trade, because it is likely to fall apart. Not what's happening here, obviously. And yeah, I'm really happy with it. All right, that's all I got for this week. I hope it was informative, and I'll see you all next time. Cheers.